Pozdravljeni, sem Marja Milič in gledate Manihao, prvi podcast o upravljanju denarja pri nas. Današnja epizoda je zelo aktualna, govorili bomo seveda o Trumpovih carinah in posledicah za praktično vse naložbene razrede, od zlata do delnic, od tega dotaknili smo se tudi seveda evropskega trga, kitajskega delniškega trga in pa seveda priložnosti ter na kaj moramo kot vlagatelji paziti. Pogovarjali sem se z vrhunskim sogovornikom, preden gremo pa na vsebino, bi pa vseeno rada vas spomnila na naš dogodek Manihao Live. Tale šov, ki ga pripravlja Donald Trump, ima tudi kar resne posledice za svetovno gospodarstvo. Delniške tečajnice oziroma borzne tečajnice so upadle od te naznanitve teh carin, je kar precej velika nihajnost, ne vemo, kaj se bo dogajalo v nadaljevanju, tako da je kar pestro in tudi seveda na našem dogodku bo precej pestro in vas zelo lepo vabim, da se nam pridružite 22. maja, kjer bomo obdelali kar en tak zanimivo vsebino. Začeli bomo z slovensko vročo borzo, ki smo, kam gremo. Imamo odlične goste, Blaž Brodnik, predsednik uprave NLB. Veste, da govori brez dlake na jeziku, tako da sem zelo vesela, da se nam pridružil tudi Drago Kavšek, bo z nami, član uprave Petrola, Peter Vlajič, predsednik uprave Erste Plavi. Mirovinski fondovi so eden največjih investitorjev na Ljubljanski borzi. Pogovarjali se bomo tudi z 1 na 1 z ministrom za finance Klemom Boštjančičem, kjer bomo malce bolj poglobljeno pogledali, kaj je bilo storjenega na razvoju trga kapitala, kaj bi še morali storiti, kakšne potencialne IPO-je lahko pričakujemo na Ljubljanski borzi, katere družbe so lahko tiste, katere bodo uvrstili kot država tudi na Ljubljansko borzo. Skratka, vprašali ga bomo seveda tudi glede obdavčitve kriptovalut, obdavčitve drugih izvedenih finančnih inštrumentov. Je v bistvu minister že napovedal, da tukaj želijo malce korigirati to obdavčitev in tako dalje. Skratka, ga bomo fajn lepo izprašali glede vseh teh stvari, ki seveda nas vlagatelji zanimajo. Potem seveda sledi biznis na žaru ali pa malo bomo porovstali slovenski kapitalski trg, gospodarstvo in tako dalje. Se pravi, brez humorja še borzni balon ne poči. Žar mojstri so Denis Avdić, Kašper Bergant, Aleš Novak in pa Žan Papič. Mislim, da bo kar zabavno. Veličastni AI je naslednja okrogla miza, kjer se bo Andraž Grahek pogovarjal z res vrhunskimi sogovorniki iz različnih panog, ki deluje tudi v različnih regijah. Marko Pelhan, direktor Team Tech Defense, Andraž Logar, direktor 3FS in predsednik Slovenskega tehnološkega foruma. Z nami bo tudi Franci Zitar, ustanovitelj in izvršni direktor Birdbuddyja, Jernej Štrasner, serijski podjetnik in angelski investitor, bil je zaposlen tudi pri Facebooku in pa Century. No, potem pa pride seveda glavna vsebina oziroma zaključek tega dogodka, dobrodošli v Trumpovem šovu, kako vlagati in zaslužiti. Jaz bom tukaj še dodala preživeti. Z nami bodo res vrhunski sogovorniki, poleg Andraža Graka, še Mojmir Mrak, Blaž Hribar, ki ga vsi poznate. Mojmir Marka seveda vsi poznate, to je profesor na ekonomski fakulteti, bil je tudi večkratni gost in vrhunski poznavalec v bistvu mednarodne politike, mednarodnih gospodarskih odnosov. Blaž Hribar, tudi večkratni gost, član uprave pokojninske družbe A. Tim Umberger je bil tudi naš gost, ko smo ga prvič gostili, je bil še partner in pa upravljalec premoženja, živel je v Moskvi, zdaj se je preselil v Slovenijo in je član uprave Advance Capital Partners. In pa ja, na koncu se bomo še malce podružili in mrežili o pijači in prigrizkih. Hkrati bi vas rada spomnila na zadnji termin v tej prvi polovici leta, Bootcamp, 10. april, se bo zgodil spet, veliko se dogaja na trgih, marsikdo se bo zdaj mogoče celo ustrašil vsega tega dogajanja. Vsak dan bomo seveda v medijih brali, da se borze sesuvajo, da je krvavo na borzah, ampak ja, vsaki takšni zgodbi se najdejo tudi dobre priložnosti in tudi o tem bomo debatirali, kako v bistvu reagirati v takšnih situacijah, ali sploh je primeren čas za vstop na trg, ko se dogajajo takšne razprodaje, ali se splača mogoče še malce počakati. Na vsa ta vprašanja bomo odgovorili, se pravi, kako sestaviti portfelj investicij, kako izbrati brokerja, kako kupiti ETF in tako dalje. Skratka, vabljeni vsi, ki želite spoznati ta čudoviti svet investiranja, da se nam pridružite na aprilskem bootcampu. Naslednji bootcamp je pa organiziran šele septembra. Tako da vabljeni. Zdaj pa gremo na današnjo vsebino. Pogovarjali smo se z vrhunskim strokovnjakom, glavnim strategom pri Interactive Brokers, Steve Sosnik, ki je v bistvu odgovarjal na kar zanimiva vprašanja, tudi vezano na to, koliko lahko še tečajnice upadajo, ali mogoče so lahko te carine novi črni labod, ki bo konkretno sesul borzne tečajnice in pahnil v bistvu tudi svetovno gospodarstvo v recesijo, kolikšna je verjetnost nastanka recesije, ali se mogoče splača investirati, spremakniti naš naložbeni horizont ali pa naložbeno strategijo bolj v Evropo, stran od Amerike, kaj se dogaja z veličastnimi 7 delnicami, zakaj Tesla tone in kaj vse vpliva na tečaj delnice Tesle, kaj se bo dogajalo z inflacijo. Skratka, res zelo dober pogovor. Priporočam, da ga poslušate. Pogovor pa je potekal v angleščini. Uživajte v poslušanju. Če boste imeli kakršnokoli vprašanje, mi pa prosim pošljite na marja@money-how.si. Hi Steve, I'm honored to have you as a guest on Money How. Let's just dive in.
Good morning, Maria. Great to meet you.
Today we'll break down what these new Trump tariffs mean for investors and how different asset classes might respond in the weeks ahead. So, were you surprised by the scope of Trump's tariffs announcements?
Yes. I mean, I thought they would be wide-ranging, but I think the way they went about them was just the scope was immense. The reason for that was it was very interesting because I was looking at the way the market was trading on Monday, Tuesday, Wednesday, and it looked like there were foreign sellers first thing in the morning in the U.S., and then they went away, and then the traders in the U.S. who tend to buy almost every dip stepped in, and the markets closed higher each of the 3 days. And when I looked at S&P options, how they set up going into the numbers, the highest probability was for another rally. So there were a lot of people seeing this as sell the rumor, buy the news. You've heard the phrase buy the rumor, sell the news. It works in reverse when bad news is expected. And what we saw yesterday was interesting because when Trump came out and said reciprocal, the first thing that the futures did was rally. We got basically almost a 1% rally in the futures. But then when he rolled out those charts, and we realized that these numbers there were both reciprocal tariffs and baseline tariffs, and they applied everywhere. I think that was too much for the market to handle, and that's why we see the reaction we do this morning. With the dollar with the stocks getting clobbered, the dollar down very sharply against the euro and the yen, among other currencies. This is not the best morning to make an introduction.
U.S. Treasury Secretary Scott Bessent urged countries not to respond with tariffs, but we are already seeing signs of coordinated response in Europe with support measures emerging in Spain, France, Germany. Are we heading toward a full-blown trade confrontation?
I hope not, but it's possible. This is what happens. I mean, if the administration more or less unilaterally declared war on every country's trade policies. There's some strange stuff in there, and this is, I think, one of the things that the market's wrestling with. it's literally like they went down a list of every country. And, I play this game Worldle. I don't know if you do that, but it's basically a geography game, and you can guess every country by the picture, and it's fun. But anyway, so in there's a list of countries and places you've never heard of. One of the places that got a 10% tariff were the Heard and McDonald Islands. Okay, the Heard and McDonald Islands are technically an Australian protectorate or territory. It's only inhabited by penguins. So there's not a lot. So there's not a lot of export. I don't know what the penguins are exporting, but somehow it's all going to be tariffed at 10%. And also I think there was some also controversy in the sense that they treated a VAT as a tariff. By that measure, the state of Connecticut, where I live, has a VAT of 6.5% because that's the sales tax that I pay. So. If you do something that broad and that sweeping that affects so many countries and so many people, of course it's going to have ramifications, and of course there's going to be a response. It would be crazy to think otherwise. Scott Bessent did himself no favors yesterday in his interview after the close, where it seemed almost as though he was a little uninformed because why was Canada and Mexico left off the list? Turns out that despite all Trump's yelling about Canada and Mexico, they're still subject to the USMCA treaty, which Trump declared as one of the worst treaties ever, I think, in one of his press conferences, despite the fact that he signed it and his prior administration initiated it. So there's a lot of weird things. Bessent also said, "Oh, don't look at the aftermarket." Mm-hmm. I'm sorry. So, so he did himself no favors. This morning, Commerce Secretary Lutnick is literally, he's been on pretty much every network. And he's towing the party line, but it doesn't seem convincing as to why there is, the argument seems to be less economic than just sort of like, hey, this is good for America. Well, if we do that to our friends and allies, how do we expect them to react? They're not just going to sit there and say, okay, this is fine. Sure. Go ahead.
Yeah, but President Trump referred to the EU as pathetic. Quite a strong statement. And do you think could such language further strain transatlantic relations, especially in a time of rising trade tensions?
They're not strained already.
They're already strained.
Yeah, I mean, this is the problem. I mean, I haven't been to Europe since all this talk has happened, so I haven't been on the ground anywhere. But I talk to friends in Canada all the time, and their comments are like, "What are you guys doing? Our countries are so intertwined in a way." Not quite as intertwined as the EU is because of the common currency and some of the other stuff. But, people go back and forth across the borders between the US and Canada pretty much like they do in Europe, where, and these borders are huge, of course, because it's, each country is the size of Europe. Canada is bigger. So the borders are enormous. And so my friends in Canada are like, what are you doing? Why are you picking on us? Or if there's stuff you don't like, let's negotiate it. Let's discuss it. I think, but that's the certain style that the new administration has, which is to talk negatively first and then argue it out later. I'm not really sure, but I think in a sense, if you. The euro is telling us a lot this morning because it's up 2 to 3 cents against the dollar. That's a huge move. There's a lot going on here, and I think somehow in this short time that we've had a new administration, it's really turned global relations upside down, and that's very difficult for everybody to figure out.
You already mentioned the dollar plunging, and Deutsche Bahn was also warning of a potential confidence crisis. Do you believe we are at risk of a broader shift away from the US assets? And could this mark the beginning of structural decline in the dollar's role as the world's reserve currency?
It's possible. The problem is it's not clear what would replace the dollar as the reserve currency. Maybe a basket, including the euro and various other things. What does seem apparent is, we've seen this big run up in gold. And one of the reasons that, you never know all the reasons 100%, but one of the reasons is believed to be that central banks are moving away from dollars and moving toward gold, back to gold as a bigger part of their reserve mix. One of the advantages of the dollar has been very much of this, at least speaking from a U.S. point of view, is that we have a very stable rule set and rule of law and very predictable policies, and that part's gone. So I don't know what would replace the dollar, but I definitely believe that there international investors, I believe, are really moving away from dollar-based assets. I mentioned, by the way, that this week we saw selling every morning on the open. That typically indicates that the selling is coming from overseas, because those are the orders sort of pile up to be done when the market opens. And that's typical. It doesn't mean everybody in the world does that, but that is something still that international institutional investors do. They want to trade they don't want to trade in the pre-market. They want to trade in the main market. And so I do believe that there's been net foreign selling of U.S. equities. I believe there's been a move away from a lot of U.S. based assets. And yes, this is all part and parcel. If you insult people, how do you expect them to respond? Especially if you insult your friends. Imagine if you went out to a restaurant with your friends to have dinner, and you just sat down and told every one of them what you don't like about them. How would that be a very comfortable dinner? No.
Yeah, but also many American experts are shifting their investments from US to European stocks. What do you think about that? What's your perspective on this trend?
I think that is repatriating assets, and it makes sense. I mean, if you're not happy with what's going on, if you've got all these investments in a country and you're not happy with what's going on there, it's logical to move it back. One statistic I read, and I don't have it exactly in front of me, I believe it was published in a Bloomberg article, that it was the first quarter, Q1 of this year, the first quarter was the worst underperformance for the U.S. vis-a-vis the rest of the world, I think, since the 80s. And what I mean by that is, obviously, we all know that U.S. markets went down. We also know that a lot of global markets did quite well. Hong Kong, Germany, among others, soared in the first quarter. So that had to come from somewhere. The money is fungible; it moves. And so the indication to me is that money moved out of the U.S. into other markets that might have come from U.S. investors. I think I know of some U.S. investors who were starting to look abroad as well. But I think it was more the case of global investors either moving their money closer to home, or just saying, let's move to where the money's working for you, as opposed to where we don't know what to expect.
And what opportunities do you see right now in emerging markets?
This is going to be tough for emerging markets, because many of the emerging markets one of the advantages that emerging markets in many cases have is that they have lower costs of labor, and there are some other structural difficulties in some emerging markets, but in most cases, the cost of labor is an advantage. Cost of capital can be tricky. Cost of all the other things that go on, shipping, etc. That's very much country by country, but overall, with the stroke of a pen, every emerging market's products just got more expensive. And the U.S. is still being the big market for a lot of these emerging market countries. it's difficult. For finished goods, everything's more expensive. And for commodities, we seem to be okay. But if this is enough to sort of throw the world into a little bit of a global recession type of environment, that's not very good. That's not good for emerging markets. The old thought was, if the U.S. catches cold, emerging markets, get pneumonia. And I think we yesterday we did our best to just cough all over the rest of the world, including the emerging markets.
Europe also gets pneumonia, so not only emerging markets. So now you mentioned recession, so what's your view on the likelihood of a downturn, and how do you think a potential recession would ripple through global markets?
I think the case for a U.S. recession just got higher. I'm not an economist, so I'm not able to really say I think it's 25%, 37%. It's concerning to me because we think about GDP this way. This is very basic construct. It's C, consumption, I, investment, G, government, NX, net exports. In theory, this was supposed to help the NX. Let me stipulate, let's say it does. We're not going to be, probably not going to be importing as much. I don't know if we're going to be exporting more, but the net will be better. But in the meantime, that you will see consumption reduced because people will just not buy they're nervous. We see this in consumer sentiment surveys, and we saw retail sales numbers start to really fall in advance of this. You're probably going to get a little bit of a tick up. I mean, literally, my wife and I were thinking about buying a new television. And I think when I'm done with you, I think I'm going to order it. So there'll be a little bit of a spike there, but I think people will then just not be consuming as much. And the government portion is literally shrinking. That's what Elon Musk and his group is doing. And there's multiplier effects for that. One of the reasons the U.S. economy did so well in the last couple of years was the fact that we had a very expansionary fiscal policy. Now, there were other problems with that policy. It was a bit too much. It created inflation. It created other imbalances. I get it. So that I understand the impulse of cutting that back. But now what they're doing is beyond reducing that stimulus to now outright big cuts. And so you're going to have G. We know we have G moving in reverse, government. Consumption appears to be moving very quickly in reverse. Investment, it's tricky because I still think people are not 100% certain that these tariffs are in the form that they're going to stay in the form. So if I'm a company looking to make an investment, I may not be rushing to do it still because I don't have a lot of clarity. And even there, that takes time. So NX may go up a little bit, but we're looking at C and I and G all moving lower. That sort of tells you that a recession is possible. And the single question I'm trying to wrestle with now, and I don't have a good answer for you because I tried to ask it of a former Fed vice chair when I was at a conference he spoke at, but my question didn't get asked. And that is, you think about the Fed having a dual mandate, stable prices and full employment. Well, we're sort of at full employment right now. We're close to it. The 4.1% unemployment is historically that's a number that was the goal, something like that all along. So that's pretty good. And the prices have gotten better. Inflation has started to work its way into the 2 to 2.5% level, not quite to 2%, but not bad. But what happens if the dual mandate starts to move in opposite directions? What if we get a situation where the labor market starts to soften because of first of all, there's just going to be a lot of layoffs from the government. There was I think Challenger announced that there were 280,000 government layoffs this morning. I think that data point came out. So the labor market is certainly not racing ahead, and it's going to have its challenges. And now we're essentially importing inflation. Powell used the term transitory, which I understand because the effect of tariffs, and I'm just going to draw with my finger, is, you have prices sort of gently moving, and then boop, up go the tariffs, and then they sort of move up again. So the biggest impact, think of it like a snake swallowing a mouse or something. It goes through the system, but you have that bulge. But what happens if prices rise at the same time that the economy slows? That's a tough situation for the Fed, and I don't know how they're going to handle it. And I think no one's really answered that question. I don't know that it's really been asked a lot. And so my concern is not so much that we're going to get a deep, deep recession, but it's more that we're going to get some sort of economic slowdown, but the prices paid component is not going to allow the Fed to react as quickly as people might hope. That's going to be very interesting, because people are very used to the Fed riding to the rescue as soon as there's the slightest whiff of trouble. And what can they do? And that to me is the ultimate question for anybody involved in the markets. And if your viewers and listeners have the answer, please send it to me.
Yeah. You think this tariffs could be the next black swan event for the global markets?
Well, you're asking me this on the morning after they're implemented.
I know.
And I'm looking at my screen, and we're looking at a big down day. Certainly seems that way. Now I will say black swans tend not to be so well telegraphed. I mean, we knew that there might be a black swan landing today, or last night. So the black swans are usually the stuff that's completely out of the low probability events that we're not expecting. For better or worse, we expected something. I don't know that we expected this, but we were expecting something. And so I'm not going to call it a black swan, but I think it's tough. I mean, one of the things here was that at least the S&P 500 was sort of holding levels that, it's correction levels. And I think that's why you started to see some people trying to buy the dip here and there. Because, they were thinking, all right, well, one of the things I've been saying a lot lately is most corrections do not become bear markets. Problem is, all bear markets start as corrections. So we were at that precipice, at that level where, sort of we could really expect to move way up, way down. Traders were betting on the bounce, because buy the dip has tended to work for the better part of the last few years, better part of history, but certainly the last few years, it's worked exceptionally well. So I wouldn't call it black swan, but I'm not going to rule out that this could be pushing us into another leg lower in markets. That, again, let's see how we go. We're taping this on the pre-market on Thursday. And one of the things we've seen pretty much, one of the almost guarantees that I could give you, and there's very few guarantees in the market, was if there was a decent dip in the morning, you'd see people try to speculate on buying futures and, okay, the dip is going to be bought. We'll do it. And some days it works, some days it doesn't, but that little bounce is predictable. I'm looking at my screen. There really hasn't been much of a bounce. So this is telling me that there may be a real bit of a psychological change. Again, we're taping this in the morning. Who knows? I could look very foolish by 4:00 my time when this is all done. But I happen to have tickets to the baseball game last night with my friends, and they're not in the finance business. Two of my friends are not in the finance business who I went with, and they're like, "Can you just explain to me what happened? Is this as bad as this sounds? Come up with some way that this makes sense." So these are intelligent people, but they're in marketing. They don't deal with the finance stuff day to day, and so they understand business. One guy owns his own business. One guy is in corporate communications at a very large U.S. company. Basically, he does the corporate communications for the CEO. So these guys they're intelligent people, but they're not necessarily financial people. And their comment, they were basically, please make sense of this for me. And it was difficult to do because it seems so personal rather than seeming, rather than seeming cut and dry about economics.
Yeah. One speculative question, markets hate uncertainty, and many people are just like thinking now, how far do you think equity prices could fall in this if this trade tension escalates? I know it's speculative, but
yeah, that's a tough one because you don't know how this will play out, how this will how the psychology changes. We've given back right now. All we've done is pretty much gotten back to levels that we saw last summer in S&P 500 terms. So is there room for it to fall more? Unfortunately, yes. How much of that we give back is hard to say. Part of it is also going to have to do with the fact that it's tax time here in the U.S. And there's also that sell in May, go away idea. So April 15th is the day your taxes are due. And a lot of investors, particularly if you're an active trader, you presumably have money. You've got to send the government a big check, in 2 weeks, less than 2 weeks now. If you've been fully invested, one of the ways that you're going to find that money is you're going to have to sell stuff to pay your taxes, which of course, depending on where you own it, is either going to create a loss or a gain, whatever. But I do think that that's going to be an interesting element over the next couple of weeks. You do see some money flow in because people fund their tax advantage retirement accounts by April 15th. But I think people were so aggressive at doing it because the market was going up. I don't think you're going to get those inflows. I am afraid you're going to get some outflows. And how that, the problem is those outflows are most likely to come in the stuff that people are most likely to own, which are the Mag 7 and other popular names. So I'm not going to say this is what's going to cause a crisis, but this is going to be a very tricky period over the next week or two for many investors because if I owe the government more money than I have in my checking account, which is fine because I've been investing in it, but now those investments are going down and I have to sell them to raise the money to pay. This could spiral a little bit. But again, I don't want to sit here and sound super gloomy because again, we are only down, 3.5%. That's a huge one-day move. But it's not unprecedented. And in and of itself, it doesn't necessarily it would be very irresponsible and premature of me to say this is, a market crash scenario because it's not
yet. Retail investors, they're panicking right now. How to plan, how to, manage your portfolio in a situation like this?
Well, here's the advice I've been giving, and I hope it's not too late to continue to give. But that was, I give this advice every time there's a bit of a pullback in the market, and that is check your stomach before you check anything else. Did the moves in the market bother you a lot, or did the moves in the market just confuse you, or make you a bit concerned? But if you got that real scary feeling in the pit of your stomach, that is your way of saying, I'm carrying too much risk because pullbacks do happen. And it's telling you that, you were embracing the good side of risk, but not necessarily as comfortable as you should have been with the downside of risk because risks are two-sided. And I think a lot of people forgot that in the last run up. I wrote about this in February, that I went to an investor conference and I was shocked at just and these were experienced investors, but I was shocked that the mood was all about assuming as much risk as you could take because the more risk you took, the more your reward might be. And my thought is, great, but risk works both ways wasn't necessarily the most popular message at the time. I wish it were more popular at the time because, it was, the right attitude. But that's the way I want investors to think about it. Are you freaking out a little bit, or are you relatively calm? You're the audience. I know I'm speaking to an audience in Europe where maybe not everybody is as heavily invested in U.S. stocks as U.S. investors are.
Oh, we are, believe me, we are.
Okay, sorry.
Magnificent Seven, definitely.
I read a similar article. I think it was on Bloomberg as well, about Korean investors just loaded up on the Mag 7 stocks. Okay, so I was kind of hoping that many of your clients might have been able to ride the up wave in Germany and much of the continent, rather than just watching Nvidia every day. But this is the problem: is the U.S. sucked in so much global capital and so much investor psychology that I think now it's going to be tough to reckon with, as it appears to be moving in reverse.
Yeah, but Europeans are also bullish on defense stocks, European defense stocks. So that's also an interesting point of view with rising geopolitical tensions. What do you think about U.S. defense stocks compared to their European counterparts in terms of growth potential and, of course, investor appeal?
I'm by no means an expert on defense stocks. I'm not an analyst on it, so I'm just going to give you a very broad view. And, all the stuff we were saying before applies. I mean, if I'm in Europe, and I've been reliant on U.S. defense contractors, and the president, seems to no longer treat Europe as a close friend, but as sort of an acquaintance who you sort of might say hello to on the street once in a while. I would want to make sure to be able to do I would lean toward the people who are nearby and who I think I'm more likely to be able to trust. So that's in terms of, should you be buying Rheinmetall versus Lockheed Martin? I can't, it's just, that's not me. I can't go there. But the rationale is sensible. Did the move get a little extreme? I'm going to say probably. As someone who always drove Saab cars, and I still actually do drive a Saab car, believe it or not, I still own one. I was shocked to see that one of the best performing stocks in Europe was Saab. I do remember that they still made jets. But it makes sense. Do I want to buy? If nothing else, I might want to. If I'm buying defense products, I think I'd want to diversify a bit at this point because why not? I mean, so that's about as far as I can go with it, though, because it's beyond my specific. It's too specific for me.
Can we just jump back to Magnificent Seven? Do you believe that they currently represent a buying opportunity at their present valuation, considering both their growth prospects and potential risk, or is this team playing out?
I think you can't ignore them. They're still good companies. They still make a lot of money. They still have immense market power. So that's not going away. I think what is challenging is the flow of funds for the reasons we said, the reasons that money might flow out of these stocks. In terms of thinking of them as an investment opportunity, you can't look at them all the same. I mean, I can't look at Tesla and Alphabet and say that these two really occupy the same universe because, Google, Alphabet is not going away. They may or may not be winning the AI race this week, this month, this year, but something like YouTube is probably the single most important media platform in the world right now. that advantage is not going to go away. Apple, I've said for years that Apple is basically in many ways the best utility stock out there, because if you own an iPhone or you own an iPad or you use a Mac computer, you're in that Apple ecosystem. Actually, much as you are with Google, with the Android ecosystem, if you choose not to own iPhones. But I know that I'm sending Apple little bits of money every month, for this app, for that app, for the cloud storage, et cetera. So Apple may not be the most exciting growth company. I've been arguing that actually it's not really a growth company because its earnings have not grown all that much in the last few years, but it is such a stable earnings stream. But then you get into NVIDIA, which, is certainly the leader in AI, but DeepSeek threw that whole model up in the air. I think we got the part of the move in the Mag 7 was based on the fact that there was this money flowing into AI and that these huge companies were going to need to buy billions of dollars of chips and energy and servers and everything that goes with it. And then DeepSeek comes along, and you have to wonder, is all that money necessary? Is all that spending necessary? So NVIDIA is a little bit trickier because, can we just assume that companies are just going to keep throwing money at AI without really knowing yet how that affects the bottom line? It's great if you could point to some productivity gains, or companies that use AI can say, you know what, my return on investment, my productivity went up by X because I spent this money on AI, and so therefore it's paying off as an investment. That's still a little murky right now. And then of course you have Tesla, which is just, over. If you want to talk fundamentals, it does. Honestly, it doesn't really have any. And it's basically it's incredibly overvalued, and that's just a leverage bet on Elon Musk's ability to deliver something in the future, robots, self-driving car, whatever. There's some bright, think about a donkey with a carrot in front of it, and there's always got to be something with Tesla. But he's damaged his brand immensely. I mean, I think it's toxic in Europe. From what you can argue, you can answer that better than I can. But I think in a lot of Europe, we saw from the sales numbers, nobody,
50% down.
Yeah, nobody, nobody wants to touch it. In the U.S., definitely there are a lot of people. I know some people. I honestly had this conversation with someone who said she sold her Tesla. She just couldn't continue. She liked the car. She bought a different electric car. See, here's the problem. There was a famous saying by Michael Jordan, the basketball player, when he started to do his sneakers, and there were a lot of causes that he was asked to be a part of. They tended to be democratic leaning causes, and and they asked him why he didn't participate very much, and he said Republicans buy sneakers too. And the problem for Elon Musk is Democrats buy cars too. And even bigger problem for Elon Musk is Democrats were the ones buying electric cars in the U.S. So, so you manage to annoy, much of the world and much of your client base. And you're not, there's the people who are buying Cybertrucks basically because they're, to show their affinity. Someone once called them a MAGA hat on wheels, but basically, for the most part, he's got a problem. And this is all occurring just as there were actually decent competitors to Tesla in the marketplace. Now, he got a little bit of a break in the US because the amount of components made in a Tesla that are made in the US vis-a-vis foreign components is greater. So he's going to get a little bit of a price advantage there. But, if you buy cars partly because of what they say about you to the world, my car says I'm the kind of lunatic who still drives a Saab convertible, even though they've been out of business for 15 years. But my thing is, My wife has a nicer car than that, but basically it's a very tough situation. So I never loved the construction, calling it, the Mag 7. Actually, I think it was January last year that I wrote a piece saying it really should have, if you're going to do a Mag 7, it really should have been Broadcom, not Tesla. But now Broadcom is suffering sort of from the same issues that NVIDIA is suffering from. So I'm not sure that that's better. So long-winded answer to your question. I think there are values. There are times where these stocks will be buys. They're not reflexive buys. Just don't say, oh, well, they're down X%, so therefore it must be a buy. But there are levels at which, these companies, if you're looking at fundamentals, price earnings and things like that, there are earnings here. There is growth. It's a bit more in question right now, but these are not, they didn't suddenly become awful companies. At least 6 of them didn't. And that's really the way I look at it.
I don't know if you know, we have in Europe granolas.
Oh, I didn't know that. I've never heard that term.
It's an acronym Goldman Sachs invented for large cap European companies.
I think Goldman Sachs has like a department that just comes up with acronyms.
Probably, yes.
Because they came up with BRICS. They came up with FANG, I think, as well. So it wouldn't surprise me if there's like a team in the marketing department at Goldman Sachs who's like tasked with all this stuff. But yeah, I like that. That's a good one.
Yeah. And what do you think about BYD?
Again, I got a little too granular as well, but BYD, I was in Mexico recently, and BYDs are everywhere. They're making an inexpensive car. It's a little bit difficult from a U.S. point of view because we like our cars bigger. And so, for example, the BYD is small. Like Chevrolet makes a small electric car. It doesn't sell all that well. Its problems are it's small and it doesn't have a huge range. Well, that's pretty much where BYD is. So it's a little difficult for me as a U.S. investor, a U.S. driver.
Yes.
And plus, I don't have access to them because of the tariffs. I will say there's a more credible reason to tariff that company because it is credible to believe that they're getting subsidies from the Chinese government, and that's not, that's the one place I'm going to say that I think tariffs do make sense. If a country is subsidizing some company or some industry that allows it to basically sell abroad, sell its stuff below its cost of production, or BYD makes money, but if there's subsidies. So it's a little bit politically tricky from that point of view. When I was in Mexico, I didn't get to ride in one. I was not in a taxi that was a BYD. But other than that, it's a fascinating company, and yet another reason to remember that Warren Buffett knows what he's doing.
Yeah, he's piling cash at the moment. So
a lot of people were saying, "What is he doing? Why is he piling all this cash? Doesn't look so silly right now, does he?"
No.
And Berkshire Hathaway is by far the best performing major cap stock in the U.S. right now, as a result.
Yeah. Can we just jump into gold? What role should gold play in a well-balanced portfolio right now? Because some people probably are looking for safe haven, and the gold probably is safe haven for some investors.
I do have exposure to gold. I own GLD. I own some gold mining ETFs. I always have a place in my portfolio for it. Maybe that's because early in my career, one of the first things I traded was gold stocks, Australian and Canadian gold stocks. They were, it was the 80s, and that's what people were in the U.S. were buying. They wanted gold exposure to gold. I've always had a place in my portfolio for them. I think a lot of the allure of gold depends on where you live. And I know this is a weird answer. So Slovenia, where you're part of the EU and, our everything is transacted in euros, you don't have this need for gold that someone, let's say, in Turkey might.
Probably, yes.
Because ultimately, your currency is backed by the ECB, and you may like them, you may not like them, you may think the Germans have too much to say about it, etc. But basically, if Slovenia needs to borrow money, Slovenia does it in euros. The euros are your currency, and so you don't have these periodic currency crises. I use the example a lot of times of someone in Argentina or someone in Turkey. If I lived in one of those countries, I would have huge holdings in gold. The reason being, my currency is subject to periodic devaluations because a lot of the borrowing that goes on in those in countries, outside, let's say, the Eurozone, the US, the major currencies, a lot of that borrowing ends up being done in currencies other than your home currency. Generally the dollar, but let's see if that starts to move more toward euros. But so if I'm living in South America and my country is borrowing in US dollars, but I have my own currency, occasionally that currency is subject to devaluation, and I'm going to really gold really holds its value then. That's when gold is a crisis hedge. In terms of a crisis or an inflation hedge, it's not as critical if you live in the Eurozone, or if you live in North America, Japan. It's just not as big of a deal, because I've often said that sometimes gold acts as a crisis hedge. It certainly does if you live in in a country that borrows to finance deficits in a different currency than its own, but more often than not, at least from a U.S. investor's point of view, it's sort of the anti-dollar because it's denominated in dollars. So if the dollar weakens, the price of gold generally rises, and although it's not today, but generally does, and vice versa. So I think gold has a role, but I think for investors in the Eurozone, that role is sort of more like, it doesn't need to be at the forefront of your portfolio, even though I will say gold has been a great winner this year. But I think, as we mentioned earlier in the podcast, I think it's partly because of central bank diversification.
One interesting data came out today. Turkish annual inflation rate drops to 38% in March.
As I said,
they were also converting their Turkish lira into Bitcoin and other cryptocurrencies.
I think but for the same reason, because it's something that's not your home currency. I had this big discussion with a crypto guy, a journalist who specializes in crypto. Let me be nice about it. And he was asking sort of making the similar point that you were. And I said, that does make sense. Yes. In many ways, it's more fungible than gold, and it does have that advantage. The problem is, and we had this discussion this morning, Bitcoin's actually a little bit off its lows as I'm looking at it. But, the question was, is it really a hedge, or is it a speculative asset? And if it were a hedge, you'd expect it to be doing a bit better this morning, in light of what we're seeing, right? Because, again, it's not the dollar, but it's denominated in dollars. So when I see the euro up more than 2 cents, when I see the yen down more than 3 yen, you'd figure that would help Bitcoin. But so much of Bitcoin has been driven by speculative flows, particularly the fact that you have essentially people like MicroStrategy, and now there's a whole crop of imitators, GameStop, et cetera, who utilize the stock market to then sell stock stock or preferred stock or convertible bonds at a premium to then buy Bitcoin. That's this little money machine that's keeping a lot of demand in Bitcoin. But ultimately, that is what it actually ties it a bit more to becoming a speculative asset, because the demand seems to be coming from people who are just, sort of arbitraging the stock market versus crypto. But to your point about emerging market, people wanting to protect their assets, living, who live, let's say, in a place like Turkey, where with the high inflation, Bitcoin, there's every reason to think that Bitcoin is a solid place in that situation to put your money. Again, though, from a Eurozone person, that's less compelling. There's reasons to own it, but you don't have to be as fearful about, that your inflation is going to go insane or that your currency is just going to suddenly devalue vis-a-vis the rest of the world. It's certainly not doing that today.
So in general, what do you think about cryptocurrencies? Should people include cryptocurrencies in their portfolio? What percentage? What's your opinion about that?
I still think it's not a mature market, which makes it a problem. Again, there's all these. When I talked about gold, I was talking about central banks moving money in and out. When I'm talking about Bitcoin, I'm talking about MicroStrategy and other companies doing like this weird arbitrage. So you could see that the flows in one are not really the same as the flows in the other. I still think Bitcoin remains speculative. It's getting less so, but it's still, cryptos are still largely unregulated. There's the question of should they be more regulated or not? I'm going to argue that in the early days it was fun to be unregulated, but I certainly wouldn't go into meme coins because that's literally just it's literally just all the stock market manipulators moved their tactics to crypto. I think there is a role for the more established cryptocurrencies, whether it's Bitcoin, whether it's Ethereum's, I'll say Solana because there's blockchains that use Solana. But ultimately it still hasn't really been stress tested. All new financial, products get some sort of real big stress test once they go mainstream. It's not clear that crypto's fully had that. It's had its ups, it's had its downs. But so as a result, I would say, if you want to do it at least in the quote unquote blue chip names. Do it with trusted counterparties. Don't lose more. Don't invest more than you can afford to lose because there are still hacks and things of that nature that just don't occur the same way. Now
that you mentioned meme coins, your president and first lady have their own meme coins, which I don't know where the price is, but they definitely plummeted from the highs.
But and a friend of mine who is very much into MAGA bought the Trump meme coin during that run up and said, I should have sold it, but now I'm losing all this money. It's like, come on, what are you doing? So, yeah, but so I'm not gonna go on a podcast and call the president unscrupulous, but let me just say that the meme coins, there's a lot of unscrupulous operators in the world of meme coins. How about if I say it that way?
Yeah. You mentioned that crypto is not a mature market. Ljubljana Stock Exchange also is not, it's 30 years old. So yeah. Interactive Brokers now is offering access to Ljubljana Stock Exchange. And how do you view the investment potential of smaller, less liquid European markets, like, for example, Ljubljana Stock Exchange? Because our stocks have high dividend yields and the liquidity, there is a liquidity risk because the market is not liquid enough.
Well, that does present a challenge. Again, and in some ways, the euro can help or hurt because it's very easy for local Slovenian investors to move their money elsewhere, certainly elsewhere on the continent, and to a certain extent anywhere in the world because you're using a very fungible currency. I think I love the idea of high dividend paying stocks. So if Slovenia is the home to many high dividend payers, that's a nice thing to have in your portfolio, especially when times get rocky. It's really nice to get a check every 3 months with some money, or have it just deposited into your account, I should say. But it's nice to get that money. And what it means is that there is a real fundamental value to companies that pay this dividend. With one with one major caveat, and that is they have to have sustainable cash flows that enable them to pay that dividend. So if they're borrowing loads of money to pay you a big dividend, that's a warning sign. If they basically just make, I'm just going to throw out a number, but if they earn cash flow of €1 per share consistently and pay you, 15 euro cents consistently or something higher than that, that's good. That's a great thing. It means they're just, they're returning money to shareholders and they can afford to do that. And what that means is because there will always be someone who will recognize the value of that steady business or that steady cash flow, or I guess I should say the steady business that enables that steady cash flow. The problem, of course, as you mentioned, is liquidity. So, you have those, it's probably better served for investors with a longer term horizon. It's an interesting place because usually, it's kind of stuff where you want a good stable cash flow, but maybe if you're looking to buy a home or a car or get married or something like that, you may not want to be too heavily invested in these, in something that could be illiquid because there are, first of all, if everybody's trying to get out, it becomes almost impossible. Secondly, just the bid-ask spreads can, impose a little bit of a cost. Even though I know we offer very low-cost trading in Slovenia and around the world, commissions are only one part of it. Bid-ask spreads are another part of it, and we can't control that. So there are some costs to that, but I think it's worth. I think that's something worthwhile, and I think your investors are in a good situation if they've got access to good, high-paying dividend companies that maybe the rest of the world hasn't noticed yet. That's something good to invest in, but again, you do have to be cautious about liquidity. It's not you don't necessarily want to be too heavily invested if it's something if you have need for that liquidity in the short term.
Now that you mentioned that Slovenian stocks can be bought, traded on interactive brokers, have you ever considered to buy Slovenian stock?
I hadn't until now. I mean, when I saw the press release, I'm like, oh, all right, I didn't know I could. Now I can. So,
did you know that?
It's one of those things I only consider it if I could do it. So I know I have friends who are who've been in emerging markets for years, and they've in the old days when I used to trade it, literally I was in international equity arbitrage. That's what I alluded to that with Canada and Australia. And I would have local brokers all the time, knowing how to source that liquidity, but it was difficult. And so, as I've started to work here where we have access to so many markets, I pretty much limit my investment thinking to where I can execute those orders relatively easily. Now now Slovenia is in the mix. And I got to admit, I hadn't done too much research into the stocks. And now I want to look for some of those dividend payers, because if I can get a nice steady stream of income in euros, I'm going to start to consider some of them.
Approximately, I think the return is 6% per year. Yes, but a Slovenian market is not part of emerging market, but frontier market.
Yeah, that's true. I guess I think the terms are a little weird sometimes, because I think still like Korea is sometimes still considered an emerging market, or China by some measures an emerging market. So I think the terms are sort of fluid. Let me put it that way.
Okay, let's wrap up.
Sure.
And I think it's important for our listeners to hear your opinion about what to do in this current situation as a long-term investor. How to allocate, what kind of asset allocation strategy you think is best to have at this point?
My first piece of advice is don't panic. We're talking on a fairly panicky day, so don't panic.
Yeah.
You make bad decisions when you panic. I think, it always is dependent upon your age and your financial situation. So, if you're a young investor, be more heavily invested in stocks. Go more for growth stocks, because over time, you have this long time horizon, and just compounding works in your favor. And you could withstand even a reasonably long period of bad investment returns, but you just sort of keep putting your money in there and on a periodic basis. Depending on other things that are going on in your life, you want to be a little more liquid. You want to be a bit more in fixed income. You want to be in a bit more safer stuff. I mentioned, the life things, car, home, family status. You have a kid on the way, you have different liquidity needs than if you don't. Retirement coming. So obviously, if you're getting closer to retirement, you want to be a little more focused on income and safety than growth. And so it's on a continuum. I think you need it's like having a healthy diet. You need a little bit of everything. You need some protein. You need some vegetables. All these things. And there's no one right mix that's right for everybody. But I would say keeping your risk tolerance in mind, and we talked about that earlier, and keeping your age and financial status in mind, I would say, you can always allocate a little bit to something fun. People always, there's sort of that what I'm going to call mad money element to it, and maybe that's where you trade your Bitcoin. Maybe that's where you sort of the American expression is swing for the fences. It comes from baseball, and you just sort of try to hit the ball as hard as you can, but it often doesn't work. Separate gambling from investment. So if there's something very speculative, that often can be more like gambling. If you're not a risky person, keep your money have a little bit higher allocation to bonds. Keep your money in blue chip, more blue chip stocks, whether those are domestic or foreign.
Great. Steve, thank you very much for great conversation.
My pleasure, Maria. It was great meeting you, and good luck to everybody. We're very proud to be members of the Ljubljana Stock Exchange, and hopefully this is the beginning of a great relationship that we have with our friends in Slovenia.
Lots of our listeners have interactive brokers accounts, so they're totally happy that they can also invest in Slovenian stocks because of high dividends.
Terrific.